Hey everyone, it's Stephanie Valdez with Keller Williams Professionals. This is Mike Lesmeister with CMG Financing. He's here with us today to talk about the whole 2016 review over interest and financing and what can we expect for 2017 interest and financing. So I'm going to leave this up to you, Mike.
Great, yeah, thanks. 2016, another great year. We had a very attractive interest rate environment that was very conducive to purchasing a home. Home affordability continued to be very high. Interest rates ranging anywhere from kind of the mid 3% range into the 4% range. We did, as you know, see a big uptick in interest rates after the election. There were some unexpected things that happened then that have caused rates to go up a little bit. But I think when you have to look at interest rates, you have to look at it on a long-term perspective.
Absolutely.
And I think we've been in an environment that has been low, some people would argue artificially low, for multiple years now.
Yes.
And oftentimes our perspective is jaded by the recent memory that we have. If we look over the longer term, even though rates have gone up, we can see that they're still quite attractive for buying a home today.
Absolutely. And you know what? A lot of people I've spoken to recently, they would compare the rates we have today compared to like 10 years ago, right? And I was like, on average, what was about 10 years ago, about 6 to 8% was the norm?
They were still a little bit lower than that. I guess the way that I look at it is, we've been in this artificially low environment, but in the early 1980s we were in an artificially high environment, right? In 1981 we saw interest rates hit highs of 17%, right? And people thought that would never end, but it did. The market normalized and we got to a normalized rate environment. And I think all that's happening now is we're hitting a normalized rate environment again. So when I got into the business in 1989, 1990, mortgage rates were close to 10%, 9.5%. So obviously a third of that now, a little bit.
Yes.
A third to a half of
so
that now.
4%, it's not the end of the world.
No,
that's what we're basically saying.
Absolutely,
yeah,
absolutely.
Yeah. So what do you think about our projections for next year?
Yeah. So mortgage rates are generally tied to long-term inflation expectations. So they're not necessarily tied directly to what you may hear in the news about what the Fed does today or tomorrow. They're changing interest rates. It's really tied to what long-term inflation expectations are. And I think that there's a perception now that given that we have incoming Republican administration coupled with a Republican-controlled Congress, that will be a more favorable environment for the economy to do better, and therefore for economic activity to pick up and perhaps a little bit more inflation as well. And so that is really kind of what's caused the interest rates to jump up a little bit since the election. And I think the consensus view is that we will see rates continue to trend upward. I don't think that we'll see massive increases. I think they're going to be kind of more measured increases because the economic footing that we're on right now is not super solid yet.
Yeah.
It's not like the solid foundation of this house yet. There's still some question marks out there. So until we're confident that that we are going to move towards more solid and reliable economic numbers, it'll just be kind of a more measured increase for next year.
Awesome. Thank you so much for giving us this overview of 2016 and 2017. Is there anything else that we should know about you and your company?
Yeah, so with CMG Financial, we are one of the larger mortgage banks in the country. We primarily focus on purchase transactions, like someone looking to purchase this beautiful home right here. And I would say that some of the things that distinguish us against some of the other mortgage companies, number one is the care with which we take care of our clients and the level of communication we provide to them. We really are interested in sort of customizing solutions to a client's needs, finding out what their needs are, what their time frames are, what their concerns are about their financing. I mean, you and I both know that the purchase of a home is going to be probably one of the largest transactions that they're going to have in their lifetime. So you want to make sure you get it right. And so we try to help clients make good decisions regarding their financing, keep them involved in the process, get their transaction closed on time every time, and offer them a diverse product menu that can meet the needs of somebody who's buying a $1 million home, or somebody who's buying their first home for $150,000 and just coming out of an apartment. So that's what we try to do.
Thank you, Mike. All right, thank you so much for tuning in with us, and we hope you have a great day.